if we take a look at 2000 here, you can see it was resistance here, acted as resistance here, and up until then, it never even came close. Once we got the breakout, that became a level of support. So even when we look at these dips, this is 1975, this is 2009, and this is 2022. So when we look at the last three sets of higher lows, we're seeing them really matching up with right around the $2,000 mark. And I think that that is where we have major technical support.
Gary Wagner, the editor of thegoldforecast.com, offers valuable insights into the gold and silver markets, analyzing current chart patterns and market dynamics to provide a precise outlook for the financial markets. On Tuesday, gold prices experienced a slight uptick in anticipation of a U.S. inflation report that could shed light on the Federal Reserve's future rate decisions. Spot gold rose by 0.2% to $2,023.89 per ounce, rebounding from a brief dip to a more than two-week low of $2,011.72 per ounce on Monday. Despite technical analysis indicating a potential downward break due to market compression, Gary emphasizes that fundamental factors, such as actions taken by the Federal Reserve and economic data, especially inflation figures, will continue to influence gold prices. Anticipating inflationary pressures in the United States has led to expectations that the Federal Reserve may refrain from reducing interest rates at the upcoming March meeting. This sentiment has somewhat reduced the appeal of non-yield-bearing assets like gold. Gold faces resistance as the U.S. dollar strengthens for the second consecutive session, supported by subdued U.S. bond yields ahead of the release of U.S. inflation data. Gary notes that before breaking above the $2,000 level, it had consistently acted as a resistance level. However, once the breakout occurred, $2,000 became a new level of support. The metal reached its all-time high in December of the previous year, surpassing $2,135 in the middle of the month. Gold surged above $2,000 an ounce for the first time since May, driven by concerns over conflict in the Middle East, which overshadowed the impact of the recent rise in bond yields. Join us as we explore the insights shared by Gary Wagner. Stay updated by subscribing to our channel and activating notifications. Thank you.
I've just compressed it starting so that we can easily see the beginning of the October rally, which corresponds with some geopolitical tension breaking out in the Middle East. That took the market up to a rather high above 2,000. It comes back down to about 1930. And then we got the all-time record high that was so short-lived, if you blinked, you missed it. And that's when we went well over 2,100. And the following day, this was on a weekend, on Friday, it closed at 2,073. I believe that is the highest close on record. Then it tracked up to past 2,100, broke back down. What we've seen since then is we have a truly defined trend moving to higher pricing. Now we have a compression triangle. We are seeing a series of lower highs, a series of higher lows. And whenever you get a scenario like that, where you get the compression, the idea behind that is as the range reduces, just as when you wind up a spring, the energy builds, and it builds until it hits the apex of this triangle. And then when it breaks, you get a release in energy. Typically, the release is to the prevalent trend direction. So when we look at recent activity where it was trading at 1820 back in October, moving up well over a couple of $100, and now is compressing, I'm assuming that based on just the technicals alone, not the fundamentals, because we know this has so much to do with when the Federal Reserve cuts rates and a lot of other economic data that's coming out, especially the inflation numbers that will be coming up shortly, you could get a break to the downside. But on a technical basis, you typically look for a return to the prevalent direction of trend, which has obviously been up since October. I believe that, and I said this right before we broke effectively above 2,000, it was my belief that 2,000 would become the new level of support rather than the current level of resistance. And that's what we were seeing. If we take a look at 2000 here, you can see it was resistance here, acted as resistance here. And up until then, it never even came close. Once we got the breakout, that became a level of support. So even when we look at these dips, this is 1975, this is 2009, and this is 2022. So when we look at the last three sets of higher lows, we're seeing them really matching up with right around the $2,000 mark. And I think that that is where we have major technical support.
Gary Wagner employs a 50-day simple moving average to evaluate short-term trends and sentiment in the silver market. Recently, the price of silver reached the target of $23, but encountered solid resistance at this level, suggesting a bearish bias. It is testing the 50-day exponential moving average, which serves as a support line at $22.60. Notably, the stochastic indicator shows clear positive momentum, indicating a potential motivation for the price to resume its bullish wave and surpass $23, aiming for the next main station at $23.70. Gary highlights the $25 level as a significant area of interest, where potential resistance or profit-taking may occur. Additionally, previous lows of around $24.33 could influence price action. Meanwhile, U.S. investment bank J.P. Morgan predicts that silver will reach $30 by the end of 2024. This bullish outlook is attributed to expectations of the Federal Reserve cutting interest rates and declining U.S. yields, which could further boost silver prices. Let's get back to the interview.
We're looking at a daily chart. On this daily chart, the first thing that I have is this green line here, a 50-day moving average, simple moving average. And that's so we can quickly assess if on a short-term basis, a market is in a bullish or bearish trend and where the sentiment lies. We can see that back at the beginning of the year, it did break below that, which meant that short-term sentiment turned bearish. There is very strong support right around $22 per ounce. We can see that it's hit from $22.19 on one low, $22.30 on the next low. Today's interesting because we have a very small size real body. That's that green portion or rectangle. But look at the high. It traded to a high of $23.16 and is backed off now to $22.82. So it shows you that there was a massive amount of buying, and that level, at least for today, was unsustainable. And that's what I find interesting. Resistance, I would have to peg at 23.25 short term. It is based on the 61.8% retracement, but more importantly, these series of tops, because the way that we look at support and resistance is where we have a market top out or where it finds support. And the way I look at that is if you're on the second floor looking down, you're looking at support. If you're on the first floor looking up, you're looking at resistance, meaning support and resistance are part and parcel of the same thing. So whereas this is an area of resistance right now, once we get, or if we get a solid break above, call it 23.25, that area should provide some energy for a breakout. And then you really have no resistance to about 23.50, the 50-day moving average. And a move above there, we'd have to look at the highs that came in December, which are about $24.90. In the near term, I mean, it might sound obvious to say, but we first got to break above 23.25. And once we do that, we have clear sailing at least till the 50-day. Past the 50-day moving average, which is at 23.48, we have to look at this top, and this is what comes in close to $25. It has some lows that come in around 24.33. That would be the area where it could run into, if not resistance, around a profit taking, meaning a short move and a return.
How do you think the upcoming U.S. inflation report will impact gold and silver prices in the short term? Considering the potential resistance at the $25 level for silver, what factors could influence price action around this level? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.